Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 3rd of December. All right, now we've seen a bit of a shift in the markets. It's good to see. Now, what it is for those traders who are sort of just new to trading. Now, what we've got is we had some key US numbers out. Really, the ISM manufacturing data. Okay, that came out much worse than expected, but really also compounded by the really weak construction spending. Now, it's not as a higher impacting number, but it had much bigger variance. So it had the same impact. You put two negative numbers together, and what you end up with is a considerable move here on, you can see here the dollar index. It hasn't gone down that far, 50 points, but in these current markets where they haven't been moving much, this is pretty good. Drop down through 98.05 support, and that has been replicated across the board. So we've seen pretty good moves here across the board in all major currency pairs, right? They were sitting there waiting for this opportunity. I sort of had this target on the Kiwi, potential move up to 66. All we needed was, really weak US numbers or strong Kiwi numbers, and you get that move. And that's what we've seen. The Aussie taking out stops above 68, the figure. This is going to be a nice clean out across the board and should really invigorate the market. Dollar yen down through sort of 109, sort of 20, 30. Up here, Euro snapped up through 110.55. Sterling, it's the odd one out, obviously, with Brexit. No real change there. And with the Bank of Canada coming up, dollar CAD is totally asleep. All right, so Aussie, Kiwi, and Euro. The pairs I've been sort of mentioning for some time are the pairs which do have some bias. Now, the good thing about this is, right, having these US numbers, we have a side of the market to work with now. We've got weak dollar in the market. So now when the rest of the numbers come out for the rest of the week, we know which way to play it. If the US numbers come out continually weak, that these other currencies should rally. If, say, we've got the RBA today coming out, if these numbers are somewhat, if the RBA, comes out with some sort of neutral, I can't see them being dovish, but we have the bias in the market. It gives us a bit of advantage when we are trading, right? It's very important you understand that's the way things are going. Now, the Donald, okay, he's really, he's starting to throw tariffs around wherever he can. So I think this is a bit of an ongoing sort of panic situation. He looks like he's going to throw some tariffs on Brazil and Argentina. I think those economies are already in the gutter, so I don't know what he's attempting to do there. But the US manufacturing numbers, the real focus. Bank of Canada, as that looms, I think it is tomorrow. That is going to be a major focus, and obviously the UK election, not too far away, that's sort of neutralising, I should say, the sterling. Now, let me just show you what that change in. I mean, I've showed you the charts. But if I just give you a look here at the general analysis. Now, this is the analysis from sort of yesterday. You can see the dollar pairs is cruising to the top side. As I mentioned, pretty weak trend strength in that. The dollar Swiss was the one pair that was moving up on the hourlies and dailies, and you just had the Aussie sort of creeping lower. Now, you throw on some really weak two-pronged US number, right? Get the weakness in the market, and you get a whole turnaround. Now, the trend strength on most of these is pretty weak, but what we have seen is actually dollar CAD is just sideways. That the other pairs here, the dollar pair is just moving lower, and Euro, Aussie, and Kiwi all ricocheting to the top side. Now, this is a slight correction. It's not a change in the trend, right? Don't get mistaken there. These are not long-term trends. If you come down and have a look at the overall trend analysis, you can see the only pair that has really kicked into gear is the Kiwi. Market sitting very short. It lost momentum. Now, the US dollar move has pushed it up through the hourlies and also through daily resistance. To me, this is the pair which has the strongest sort of upward bias at the moment. But it doesn't mean if we get some data here coming into play, that's where these other pairs can really match up. And what we're looking for is the data to match up. Okay, so with the Aussie moving higher, we want some positive tones out of the RBA and the GDP data as well on Wednesday. If we get strong GDP there, the Aussie is going to be another cent higher. And then you come back down into the rest of it. Because we've got this bias, if we get weaker US numbers across the board, we're going to see a more sustained move across all the major pairs. And that's what we've been missing for some time. So I'm quite excited, as you can tell. This is a good start to the week. I missed the ISM manufacturing numbers myself, but I'll be looking to cash in on the upcoming releases and using this current market bias to our advantage. All right, guys, have a good trade day. Cheerio.